Welcome, Lena. Today we're going to consider a topic which is called corporate income tax. Remember, we've been learning about types of taxes. We learned about different types of taxes. We discovered that we have got two major, form of taxes. That is direct and indirect. However, this time around we are focusing much on different forms or types of direct taxes, of which corporate income tax is one of them. Last time, or maybe in the previous lecture, we learned about pay as one of the types of taxes or form of taxes that falls under direct taxes. So this time around we're going to have a full understanding of what corporate income tax is all about. Right, so now we need to have this understanding that corporate income tax, which is abbreviated as CIT, is actually a direct tax that is imposed on the profits earned by companies and other incorporated businesses operating in Zambia. So now it's actually one of the major sources of government revenue, and it also plays a significant role in financing public services, national development in our country, Zambia. So now, in Zambia, corporate income tax is also administered by Zambia Revenue Authority. So just like in other taxes, so corporate income tax is administered by the Zambia Revenue Authority, that is ZRA, under what we call is Income Tax Act. Right, so now this corporate income, it is so important such that it ensures that businesses contribute a fair share of their profits toward the country's economic and social development. So now you understand that both local and foreign companies, operating here in Zambia are generally required to do what? To pay corporate, income tax on taxable profits, which is actually subject to the provisions of the law. So this is quite interesting and very important, and it's very important that each and every citizen of any country here in Zambia, here in Africa, here in Zambia and any other country, they need to have interest of getting to know more about the types of taxes that are there in their countries. But I want to believe that by the end of this lecture you would at least have basic understandings of why why a corporate income tax is so important in our country. Right, so now let's move on to the meaning of corporate income tax. So now what is this corporate income tax all about? So corporate income tax is a tax that is charged on the taxable profits of companies and other corporate entities. That's what we call as corporate income tax. Right, so now how is it calculated? So it is always, when is it calculated? It is calculated after deducting, that is, allowable business expenses, that is from the company's total income during what? During an accounting period. Right, that's when corporate income tax is taxed. All right, so now the tax is paid directly by the company to the government through what? Through what we call a ZRA, or Zambia Revenue Authority. Right, now what are the objectives of corporate income tax? The objectives of corporate income tax, you need to understand that the corporate income tax has got main objectives. And what are those main objectives? The first one is to generate revenue for the government expenditure. So the first objective of corporate income tax is simply to generate revenue for the government expenditure. You need to know that government has got expenses. Right, then another objective is to ensure that businesses contribute to national development. So each and every business, it is its obligation to make sure that it contributes to the national development. Another objective of corporate income tax is simply to promote fairness in the tax system. Then another objective is to finance public infrastructure and social services. You need to understand that we've got what we call social services. We also have what we call public infrastructure. So the purpose of, the objective of this corporate income tax is simply to finance those, infrastructure and social, services for the benefit of the people of Zambia. Another objective is simply to encourage proper, financial record keeping. This is very important. And another objective is simply to promote accountability and transparency in business operations. Then another objective is simply to support sustainable economic growth. So now, who pays corporate income tax? So corporate income tax is paid by limited liability companies. Okay, it's paid by public companies. It's paid by private companies. It's paid by foreign companies, that are operating here in Zambia. It's paid by state-owned enterprises, that are engaged in taxable business activities. It is also paid by other, incorporated business entities. Right. It's also paid by taxable income. So you need to have this understand that corporate income tax is actually, charged on taxable profits, which are determined after, deducting allowable business expenses from total business income. Get this point, it's very important. So corporate tax is what? Charged on taxable profits, which are determined after what? After deducting allowable business expenses from total business income. Right, so now, what are those examples of taxable income? So examples of taxable income include sales revenue, okay, service income. We also have rental income. We also have investment income related to business activities. We also have other business earnings and also allowable business expenses. Right, now let's move on to the examples of taxable income. We continue. Examples of taxable income. We have allowable business expenses. Okay, yes, allowable business expenses. This one is the last one on the examples of taxable income. Remember, we've been talking about examples of taxable income. So the last one is allowable business expenses. Now you need to have this understand that companies may deduct legitimate business expenses before calculating what? Taxable profits. And now these legitimate business expenses include which ones? Include employee salaries and wages. So companies deduct legitimate business expenses, that is before calculating taxable profits. So now those legitimate business expenses that must be deducted before calculating the taxable profits. We have number one, employee salaries and wages. Number two, we have rent for business premises. Third, we have electricity and water bills. This must be deducted. The expenses for this must be deducted. We also have office expenses. Then we also have transport and fuel costs. All right. Then we have depreciation, that is capital allowances where it's actually now applicable. Okay. Then we also have advertising and marketing expenses. Right. What else do we have? Insurance premiums that are related to what? To the business. Okay. So now let's move on to the responsibilities of companies. What are the responsibilities of the companies? The responsibilities of the companies, quite a good number of them, but we're just going to consider a few. So companies are required to register for tax with the Zambian Revenue Authority. So this is one of the responsibility of a company, to make sure that they register for tax with the Zambian Revenue Authority. Number two is to obtain taxpayer identification number, that is abbreviated as TPIN. All right, so TPIN, that is taxpayer identification number, taxpayer identification number. That's what we call TPIN. So it's an obligation, it's a responsibility of a company to obtain a TPIN, right? Another responsibility of a company is to maintain accurate accounting records. This is very important. account statements must be well generated. Okay, then another responsibility of a company or responsibilities of companies is simply to file annual income tax returns. This is very important. As long as you are running a company, you are running a business, by the end of the year you are required by law to file annual income tax returns. We are going to learn about this in the future. Then another responsibility is to pay corporate income tax within the prescribed deadlines. Okay, then what else? Another responsibility of companies is to cooperate with tax audits conducted by the Zambia Revenue Authority. Okay, then another responsibility is simply is to make sure that you comply with the law in terms of responding positively to payments of taxes. So now, when you fail to comply, that may result in penalties, interest, or legal action. So it's a responsibility of a company to make sure that they comply with the laws that regulates taxes in Zambia, and failure to comply, that may result in what? Penalties, may result in penalties, interest charges, or legal action. Now, what are the advantages of corporate income tax? The advantages of corporate income tax, number one, is to generate government revenue. So corporate income tax provides substantial revenue for what? For financing public services and development projects. This is very important, right? Another advantage of corporate income tax is simply to promote economic development. How? You understand that the revenue collected is used to fund what? Is used to fund education, to fund healthcare, to fund infrastructure. Let me just rub this one. Okay, to fund infrastructure and what? And other national priorities. So one advantage of corporate income tax is simply to promote economic development. So we realize that the money, the taxes collected, or the revenue collected, is always used to fund educational programs, healthcare, activities, infrastructure, and other national, priorities, which is very important. Then another, advantage of corporate income tax is to actually to encourage accountability. So now companies are encouraged to maintain proper accounting records and comply with the, with financial reporting requirements. It's very important. Then another advantage of corporate income tax is simply to promote fairness. So now profitable businesses actually contribute to what? To the national development according to their ability to pay. Another advantage is simply to support public services. How? Corporate tax revenue, it is of great significance in the sense that it helps finance roads. It helps finance roads. It helps finance hospitals, finance schools, security, and other essential government services. So you cannot run away from this corporate income tax. Is of great significance in the sense that it benefits all of us as the citizens of this country, and it helps our government to grow economically. Now, what are the disadvantages of corporate income tax? So the first disadvantage is that it may reduce business profits. I think so far you have gotten where the corporate income tax is taken from, right? So it may reduce business profit. So payment of tax reduces the amount of profit available to the shareholders or reinvestment. So sometimes, if not careful, you may fail to reinvest because part of the profit is paid as what? As tax. That is under corporate income tax. Then another disadvantage is compliance costs. So companies incur costs in maintaining accounting systems, preparing tax returns, and also hiring tax professionals to help them do some necessary work that would make the company be at a better position. right? Then another disadvantage is that tax avoidance and evasions. Another disadvantage is tax avoidance and evasion. So some businesses may actually attempt to reduce or avoid paying taxes through illegal or aggressive tax planning practices, which is very dangerous. Okay, another disadvantage is that it may discourage investment. So if tax rates are actually perceived as too high, some investors may actually choose to do what? To invest in other countries instead of our country. So this corporate income tax, if the rates are perceived too high, that may discourage investment by investors. Right, so now we move on to the importance of corporate income tax in Zambia. So now, what are the importance of corporate income tax in Zambia? You understand that corporate income tax, in Zambia contributes to Zambia's development. How? By actually financing government expenditures. Number 2, by supporting infrastructure development. Number 3, by funding education and healthcare programs. What else? By also promoting business accountability. Okay, it is important in the sense that it also reduces dependence on external borrowing. So when this is done effectively, fund that the country may actually at the end of the day be on a better position where they may have enough money such that the country may not opt to borrow from another country, right? Then another importance of corporate income tax in Zambia is that it encourages responsible corporate citizenship. So at the end of the day, if you are to become a responsible citizen, you must be concerned and participate in the public affairs of the country. Right, let's now look at the challenges in administering corporate income tax. So now, what are the challenges that are faced in administering corporate income tax? So now, some of the challenges that faced or encountered in administering corporate income tax include tax evasion. Secondary, we have transfer pricing by multinational companies. These are challenges that are faced or experienced in administering corporate income tax. Then under reporting of profits is another serious challenge where businesses, businessmen and women, they do not report the actual profit that they had collected or earned, but they report less the actual profit, hence less tax being paid. The idea there is that they should have actually reserve, or they should have more money left to themselves. So it's quite a challenge. Then another challenge is weak record keeping by some businesses. Some businesses, they do not do proper recording of their business transactions. Okay, then another challenge is large informal business sector. You understand that we have got a lot of businesses that are being done, yet they are informal, possibly not fully registered. Hence it's always hard to have them taxed, because they are more like they don't exist, meanwhile they exist, or they are not recognized by the government. So another challenge is limited taxpayer awareness. Most of business women, business ladies, and businessmen, they are not enlightened as in regards to the importance of tax paying, as well as on how to go about payments of taxes. So it's quite a challenge, and therefore the government of the day, through Zambia Revenue Authority, have got a duty to enlighten, to make people have that awareness, okay, to have them educated on the importance of tax payments, right? the Zambia Revenue Authority, continues to do what? To strengthen enforcement and improve compliance through, audits. Okay, through audits, taxpayer education, and digital tax systems. So when we consider the time we are living in here, our government, or I would say ZRA, have introduced digital tax systems, which makes the whole process to be very easier, in the sense that everyone can do it on his or her own wherever you are. So just like I've mentioned all these challenges, so the Zambia Revenue Authority, regardless of these challenges, have actually strengthened the enforcement, and also they are trying their level best to improve compliance through audits, through taxpayer education, and digital tax systems. And also tax paying, all right, through audits and tax paying. All right, so now let's move on to the examples of corporate income tax. All right, example that we can give is that we may have a manufacturing company that is operating in Zambia. So that manufacturing company, operating in Zambia, earns profits after deducting all allowable business expenses. Now the company now needs to calculate its taxable profit. Then it files annual tax return with the Zambia Revenue Authority, and then it pays corporate income tax due in accordance with what? With the Income Tax Act. So now, in summary or in conclusion, corporate income tax is a key component of Zambia's tax system. So it ensures that companies contribute to the country's economic development. How? By paying tax on their profits. So now the revenue that's generated supports government programs. The revenue that's generated supports government programs. It also supports infrastructure development. It supports education, healthcare, and other essential public services. So effective administration of corporate income tax is of great significance in the sense that it promotes fairness. It promotes what? Fairness, transparency, and sustainable economic growth. So this is where we end for today.